think if they really start to use that data, particularly using technologies like cognitive, we strongly believe that that's going to be a source of sustainable competitive advantage for them.
Hello and welcome to this masterclass on Banks in a Perfect Storm, presented by The Banker in partnership with IBM. My name is Brian Kaplan, editor of The Banker, and in this first chapter I will be talking to IBM's General Manager for Banking and Financial Markets, Likhit Wagle, about moving beyond digital, winning in a challenging environment. So Likhit, we've said banks in a perfect storm. Why are banks facing a perfect storm?
So a number of things, Brian, that are happening at the same time. So, notwithstanding the headline levels of profitability that some of the banks are reporting,
Which are truly dire, actually.
yeah, we're still very much in a low interest rate environment, and returns on equity continue to remain well below what investors require. So financial returns are very low. If you look at customer expectations, particularly as the customer base is now shifting very rapidly from the baby boomer generation to generation X and Y, you're getting a customer base is not just technologically savvy, but they're looking for some very different things. They don't look for advice only from a relationship banker. They're looking for advice from their peer groups. They like to do a lot of online research themselves. They're looking for a lot of transparency. They're looking for value for money. Very different from what the banks were prepared to do.
So we've
before.
got new customers, we've got regulation, we've got security issues, and then recently we've had this announcement, rather shocking announcement that the UK is going to leave the EU, which nobody was expecting. So I mean, what does an announcement like that mean for banking?
So I think starting off, it creates a significant amount of uncertainty. I think the most immediate requirement is how are a number of international banks that are based in the UK and have been using the UK as their basis to trade with the rest of Europe, what are they going to do about passporting, and is that actually going to mean that they're going to have to shift a lot of activity that was taking place in the UK to Europe? But I think more substantially, if I was just kind of generalizing about this, what it's actually showing is the banking industry is again going to incur probably a lot more cost without not necessarily having opportunities for more revenue. So again, I think it's exacerbating the problem for them, making it even more of a perfect storm, if you want to look at it that way.
Okay, well now, let's distinguish some of these challenges into sort of what you might call upsides and downsides. So I mean, you described these new, young, digitally savvy, demanding customers. But if we get this right, that could be an upside in terms of new revenue.
Very substantial upside. And I think the digital revolution within the financial services industry, which is also being forced to a large extent with the advent of fintechs, and there's an expectation that fintechs could disrupt anywhere up to about 25 to 40% of banking profitability. But what the digital revolution is actually doing, in our view, is creating a real opportunity not only to drive a lot of new revenue through different operating models. So this is where the banking industry is not just lending you a mortgage, they're actually helping you with acquiring a house. There's a lot of service that goes around your making that very important purchasing decision, where the banks can provide advice to you that's very much more than that basic mortgage. So there are absolutely revenue opportunities. The other side of this, though, is also on the cost side. What digitization does through automation, through the ability to put your infrastructure onto cloud, is to really take a very substantial amount of cost out. And again, in our view here, is the industry can move from taking 10 to 15% out of cost to now starting to target 35 to 40% out of cost. So again, our kind of summary view here would be, remember I said 35 to 40% being disrupted in terms of profitability, probably net 10% addition overall that banks can actually achieve if they go beyond digital. And I think the part that's really important here is data. Banks have access to a lot of data. They own data. I think if they really start to use that data, particularly using technologies like cognitive, we strongly believe that that's going to be a source of sustainable competitive advantage for them.
Okay, now the thing is, I mean, we've got all this competition from fintechs, and they're much more agile. They're better at attracting those new demanding customers than the banks are, aren't they? The banks are stuck with legacy systems. So how are the banks going to adapt to this new environment?
What's been very interesting there, Brian, is that when I was consulting with a number of clients a few months, even kind of years ago, this was all about acquiring those fintech companies. So it was all about investing in fintech companies. Now it's about creating marketplaces. It's about collaboration. It's about the banking industry creating an ecosystem where they're going to collaborate with the fintech companies. So these are examples like JPMC collaborating with OnDeck to attack the SME marketplace in a way which is much, much more effective. I think if you look at the wealth management industry, particularly wealth management for the mass affluent as opposed to the ultra-rich, we absolutely expect this to be the banks coming together with a range of fintech companies that then are able to provide a much better set of a portfolio that really meets the requirements of that particular sector. So I think the flavor here is very much about collaboration, creating marketplaces, and therefore the whole thing around API economies, where the fintechs that you want to work with could seamlessly plug into the banking platforms, is going to be what will make the difference in the future.
Okay, now one of the things the banks complain about is that they're highly regulated, where the fintechs are less regulated. The regulation is just a fact of life for the banks, isn't it? So, how is this approach through technology? How can that deal with the regulatory challenges that the banks face?
And you're right, Brian, it is a fact of life. And I think the other side of it also is that the fintechs are being very smart. They are very much focusing on those aspects of the banking business that do not require regulation. So in some ways, this is not an even playing field. And therefore, once again, what's really quite important for the banking industry is how do I comply with regulations in a way that is not going to create and continue to create a cost handicap to us. And again, there a lot of technology that is starting to become available, particularly around cognitive, around machine learning, which means that you can now start to automate a lot of the activity that's been taking place manually, is going to enable you not only to bring the cost of that compliance down, but also to be able to do it very, very rapidly indeed. So I don't think it's ever going to go away. I don't think we're going to be in an environment where that's ever going to be an even playing field between the banking industry, who will always have to comply with the regulations, whereas fintechs will be more specific and operate in areas where regulation is lighter. But what I think the banks can absolutely do is make sure that they're really minimizing the costs of compliance, and where they are starting to use risk as, again, because they're taking advantage of the data that they've got, they're starting to use risk as a source of competitive advantage.
Look, let's leave it there. We're going to come and talk about technology and regulation in Chapter 2.
Thank you, Brian.
Thank you.